Hey team, good morning. So obviously I got the allergy medicine this morning and feeling a lot better from yesterday. And what I really want to throw out there is the amount of panic and fear that are coming through the DMs. I'm getting it on the Facebook page. I'm seeing it in the comments. Listen, especially if you're newer to investing, this is extremely normal. Markets go down. We do not live in permanent bull runs where things always go up or stay nice and even. The best thing you can do for yourself, for your wealth, for your portfolio, for your holdings, okay, is ask yourself a serious question. If you do nothing right now, you put your phone down and don't check prices for a week, what is the worst thing that will happen? Okay, let's think about it. Maybe your portfolio goes down a bit. Okay. Maybe you end up where you were. Okay. Maybe things turn around. Great. But here's what you can't control. You can't control whether Russia is going to invade the Ukraine or not, or when. You can't control the impact of oil if that happens. You can't determine when and how algorithmic and high frequency traders will stop triggering these math events that are creating these sells. You can't control who's really, really overdone on margin and will have liquidations. What you can do is recognize that if you have a belief in your holdings, in the companies that you're in, and you have a conviction for those companies, then you made the right decision. And if you liked a company at 20 and you bought it at 20 and you liked it at 20, then going down to 10 just means it's at a discount to what you think it should be. And keep in mind, we know we have high inflation. We know we're going to have actions from the Fed. We know lots of things are going on. We're even hearing now that the White House is preparing, I don't even know what the right word for it is, an executive statement or action on regulations for crypto. Fine, this is normal. One of the benefits of having been around for a long time and getting started in the late 90s is I've seen a lot of really bad turnarounds, corrections, bear markets, crashes. And the one thing that's kept me going over all these years is realizing when I look back, those are lows so low now, we don't even think about it. We're not even in the ballpark of where we were back then. This is a long-term game. If you're a trader, I understand you're gonna think differently about this. If you're looking for intraday opportunities, the ups, the downs, the which ways are going to go, I get it. Be careful because it can change fast and can switch on a dime. It can push you way out of a position really quickly. But you're an investor, whether it's for FIRE, financial independence, or retiring early, or it's in 30 years, or it's in 10 years, or whatever the case might be. This is why you need to educate yourself on managing a balanced portfolio with risk built in. Okay. The other thing I want to call out here is because this is one of the reasons why people who work within finance, and especially those like even myself who do finance videos, always say, make sure you consult with licensed professionals, financial advisors. And with that note, I'm not your financial advisor. I don't know your financial situation. It's why I don't give financial advice. I don't make recommendations on prices or how to balance your portfolio. This is about getting education from as many places as you can, aggregating it, and trying to make a decision that's best for you. But one thing to think about, if you're going through events like today and it is causing you're not sleeping at night, you can't focus on your job during the day, there's nothing wrong with using a financial advisor who will have you in a stable portfolio that's built for the test of time. And maybe you won't see the YouTube level 30, 40% returns, but you'll work your way to retirement and be perfectly good. So just keep in mind, if the stress of doing this is really causing major anxiety, depression, sleepless nights, eating issues, take a breather. It's okay. You shouldn't be trading on margin if you're a new investor, okay? Full stop. There is no gray area. If you are a new investor who has not experienced multiple types of markets, ups and downs, you should not be in margin. I cannot be more clear here. The risk of margin and liquidations and the ability to then climb back out of it, it's tough, even for experienced investors. So keep that in mind. And the other thing to remember too, there's this delineation between this idea of a professional investor or trader and a retail investor or trader. And I see this sort of machismo all the time on YouTube where people say things like, who are you to say I'm not a professional trader? I make lots of money trading. Absolutely. The difference is when you're trading for yourself, it's your own money. You're thinking about it very emotionally oftentimes. I'm not speaking for everyone, by the way, but hearing the panic, looking at Twitter, people freaking out all over social media. I have tons of friends who are asking me what's going to happen next. There is no reason you need to look at your Robinhood app every day. Period. I mean, I don't even know why you would be, frankly, right? Major portfolio positions of the biggest companies in the world, huge hedge funds, institutional traders, they're investing long time. What's up? What's up, D. Edwards? I will be honest with you too. Just making a comment about the overeating. Like, I find that I literally have a coffee next to me. I find that like I'm just pounding coffees all day because I'm watching the markets and the news. And I think that one of the things we've gotten really used to from the social media life and the instant gratification of looking at everything is it is so easy for me to pick this up and just sort of cross my fingers and hope in that moment that I'm going to see a turnaround. But there's no reason for it to turn around in the next 5 minutes. But I'm going to put all my emotions and stress into that moment. And I think that the reason why we see corrections is because as much as we see the one swing all the way up, it's got to come back down and correct. It's just consolidation. And there's always a lot of fear. I do not want this to carry over to the crypto space. Again, full disclosure, like I'm in Bitcoin and Ether and then like a little bit of other things here. But I have been since 2016, 2017. So I am a very long-term holder of my positions. I build my portfolio to withstand the test of time. So even like today, as I'm watching my growth stocks get absolutely hammered, which I'm still bullish on long-term, by the way, I also have a lot of bond positions. I also have a lot of oil positions. I have a lot of energy positions. So what I'm trying to understand at all times is what is the risk and flow within my portfolio? Debt-free Dad, thanks for joining in, man. I'll make a comment too on that in a second because I think it's a good call out. I think that there's three things you can do in markets like this, and it's really as simple as one of three things. You can take a look and realize you're in no near-term risk of having anything happen to you, right? You're not near retirement. You're young enough to keep going for another 5, 10, 15 years, whatever the case is. Do nothing. Stop checking. Take a week off of the markets. I guarantee you're going to feel better when it's over. If you think that we are completely going away from reality, things are never going to get back, and there's no way you're going to sleep at night until you fix that problem, exit your positions, right? If that's what you think is right for you. I don't think that's ever the right thing to do, right? To sell at lows. Because all you're doing is transferring the money to someone who's buying them. Keep that in mind. When you're selling, someone's buying. Yes, there are market makers and market mechanics that work here, but you get my point. And the converse is, there are a lot of people who are going to look at this as an opportunity to get discounts in the market, right? They're going to come in here and they're going to see things at all-time lows that they liked when they were double the price they are today. So someone's going to come out of this either way with more positions at a lower cost average, and they're going to end up being happy in a couple of years, maybe even shorter term than that, right? Could be a couple of months or weeks. Who knows? On the note of Marcus over at Debt-Free Dad, which is a great channel who's actually I just saw released a new video today, I think, right, man? On Crypto 101. Over the weekend, I bought more Bitcoin. It's not that I am like all in or I'm going crazy with it, but it's a small piece of my portfolio, a slice of speculation, so that if I can get those big returns, they're there. And if I lose them, it's a write-off. It's no stress. And I think that in a nutshell, what I'm really talking about right now is there's a lot of personal psychology that goes into this. It's understanding who you are, right? It's okay that you get anxious or nervous. And it's also okay if you don't. It's okay if you crush, a little bit of extra food every day because that gives you some comfort when you look at it. It's okay if you drink 3 coffees a day like I'm going to probably do today. But I think what I recognize at scale is I can't impact the markets. I can only impact what I do about the choices I've already made. So for me, this is a great time to hold off, leave my portfolio alone, add to certain positions that I like. I wanted to increase a little bit more of my BTC exposure. So I did that over the weekend. And with everything else happening, I can't control it, right? You're going to tell later on when you see me walking on the walls, Marcus. And I think the biggest thing we can do here is just recognize that we can only control our own decision-making within our own level of risk and risk tolerance. So stop worrying about what everyone else is doing. Stop worrying about the talking heads on CNBC who get it wrong 5 times a week, 5 days a week. Think about where you are, why you built the portfolio the way you did, what you like about it, and what your tolerance is for risk, right? I mean, all it takes is looking at any market over the course of a year, 2 years, 3 years to realize, like, with inflation, economic pressures, and just general geopolitics of what goes on in this world, there has to be consolidations and contractions in the market. They always end up coming back. And I know that past results are never indicative of future returns, but the reality is history is a good teacher oftentimes. and good companies will come out on top. And if you're investing in good companies, that's great. And if you're not, and you made a bad decision, that's okay too. Take the loss and move on. So with that, I might check in later today, seeing how things are going. I really appreciate everyone checking over here. Please do yourself a favor. It is not worth stress, anxiety, depression, sleepless nights. It's not worth it. Stop checking the numbers. You're not going to help them go up by doing that, okay? We'll talk to you later. Good luck today. Take a breather. Go outside, get some air. Do whatever you need to do to make yourself feel better. And until then, thanks so much for watching, everybody. Have a great day. And Marcus, I'm about to go watch your video too, so I'll check that out. Thanks, everybody.